Hello and welcome to NDTV Profit. You're joining us on this special discussion where we are talking about the RBI's new master directions on fraud risk management. Now, essentially what the RBI has done is that it has included a Supreme Court order from last year as part of its fraud risk management guidelines, where banks and other lenders have to give a borrower adequate time to respond and make themselves heard in a fraud account classification proceeding. Once the bank finds out that an account has seen some fraudulent activity, they have to issue a notice to the borrower. The borrower has to respond to that notice within 21 days, and only after that can the bank take a more reasoned decision and pass an order whether an account is fraud or not. Now, this was a big change from what the norms in 2016 had suggested, because hearing the borrower was not part of those norms at that point in time. To take this discussion further, I am joined by Mr. N.S. Vishwanathan, former Deputy Governor of the Reserve Bank of India. Of course, he's been closely involved with the way the RBI has been dealing with fraud account classification. So welcome, Mr. Vishwanathan. I just wanted to invite you to this conversation and try and understand from you how exactly are you seeing these new master directions making way for borrowers to be heard more. Do you think that maybe the 2016 guidelines did not note it, but it was probably happening behind the scenes?
For all I know, good morning and thank you for having me. For all I know, post the Supreme Court judgment, a separate circular was issued by RBI saying that this process has to be followed. Okay, so what I want to do is to look at the master direction that's been issued yesterday under three strands. One is that it's a consolidation of existing instructions. For example, on matters related to frauds were scattered across different instructions. For example, they were there in regard to, say, when you're selling a loan to another bank, when you're selling a fraud case to an ARC. They were all in those different circulars. So what's been done in the first place is to kind of consolidate all of them into a single place so that there's clarity. And the banks do not have to look at multiple circulars, which is what RBI said, simplification in that one sense, number one. The second part, what I see in the circular is clarity. So clarity in terms of timeline, as you said, 21 days, timeline in terms of when do you red flag, all those things have been put in place, and also the entire process that has to be followed to go through to ensure that the principles of natural justice have been actually applied before declaring an account as a fraud or fraudulent account. So that's the second set. Third is also the sort of clarity in terms of reporting as to what is the date of occurrence of a fraud, what is the date of detection of a fraud. All those things have been clarified. Similarly, there's clarification with regard to who is responsible for reporting in case of fraudulent instruments, whether it's the pay bank or the paying bank, depending upon the circumstances. So there's clarity. And last, I think, is a fair bit of simplification in terms of the requirement as to when a bank can close a fraud, close reporting of fraud. Even in cases where the investigations are going on, but of a given period of 3 years, there's permission to close the fraud. So to that extent, there's clarity there. Last, I think, as mentioned in the press release as well, the RBI has brought in data analytics and market intelligence as an important element of fraud risk management, and it's become part of the whole framework that RBI has put in place. So, to put very clearly, consolidation, clarity, simplification in that sense.
Okay. One of the key elements of the 2016 circular, because that was the time when you had the JLF and then multiple restructuring schemes that the RBI had at that point in time brought out, which were, of course, all superseded later. But one of the key elements in that 2016 circular was how consortium lending needs to deal with fraud, where specifically they said that there has to be coordinated action amongst the lenders. So while individual lenders would take their call depending on what they find in their assessments, it still had to be sort of a coordinated move. Now, in the current guidelines, that seems to be missing. Is this probably because consortium lending itself has reduced to a great extent, or how do you see it?
No, I think if I'm correct, what RBI has said is that any bank can individually take a call on whether to red flag an account. Okay, so one is the RFA, the process you actually red flag an account, and then once it is red flagged, if it is typically when it's a consortium, it will definitely be a case that will get reported in the CRILIC. It must be reported in CRILIC database, and then other banks also will have to take a call on whether to red flag it or not. For all I know, whether to declare an account as fraud or not will still be what you call a consortium process. I think it will be the banks who will join together. I'm not very clear, but I think I'm not sure. What they have said is individual banks can do an RFA and go through the process, but I think whether a single bank can declare, even as a part of a consortium, a single bank can on its own declare it as a fraud. I'm not very clear, but either it's intentional or it is understood that all have to agree with that, at least in terms of percentage.
Right. One point I wanted to understand from you was this aspect of classifying an account as fraud. That has been it's a bit of a struggle always with the banks, because typically they take too much time, and then by the time they actually classify the account as fraud, there is no remedy to that. Once you've classified and classified, but by that point in time, most likely either the company is shut down or there is no avenue for recovering that amount of money. Now, in the current guidelines, they're saying 180 days. The RBI specified that sort of timeline to complete the entire process. Wanted to get your view on this timely nature, whether the timelines make sense as far as the lending community is concerned, because 6 months for banks seems a bit short.
So I think if you look at again the guidance, what they said is that in the normal course, it's expected to be completed in 180 days. And if it goes beyond 180 days, there is a governance process, there's a committee on large value frauds, which has to review and be satisfied that the timeline is being not followed for a good reason. So it's not that it is expected that in the normal course, 180 days should be sufficient. And I think that's a good timeline. And it's not that it's an open and shut case that you can't, you have to necessarily postpone it. There are valid reasons. It can go, but it's not something at the executive level that the decision can be taken. It goes up to the subcommittee on frauds of the board that will take a call whether the non-completion within the time frame is reasonable or not.
Right. I remember one of your speeches from 2018 where you pointed out that banks have to call a fraud a fraud. There's no way of getting around it. If an account is a fraud, then you have to call it a fraud. But now the Supreme Court is saying, okay, no, but also listen to the borrower before you call them a fraud. What I wanted to understand from you is that is the system geared towards protecting the borrower more than the banker at the end of the day?
See, I think there are a lot of, this is not a straight answer you can give, okay? Because when somebody is being classified as a fraud, okay, there's a lot of, stigma attached to it.
Yes.
And somebody being called a fraud without a due process is not great for the simple reason that there could be reasons, because in business, there could be reasons why an account has gotten into a problem. So I think giving the borrower a chance to explain why the account is not a fraud is something that, in terms of principles of natural justice, Supreme Court has laid it down. So I think it's a given. In any case, I don't want to comment on that's right or wrong. Once the Supreme Court has put that in place, I think it's for the system to follow it. And in any case, as Reserve Bank has said, it's not by itself. It's not taking a long process. It's only 21 days of giving notice to the borrower. Once the bank has taken a call that's a fraud, giving the person a notice. So effectively, if you ask me, it's those 21 days, right? That has got added in terms of when an account is going to be classified as fraud. So I don't think that per se is the worry. The issue is more in terms of identifying fraud in time. Once that happens, then I think the rest of it falls in place.
All right. I want to ask you one last question. Do you see this additional additional timeline and the ability of the bank to identify and thereby start with the process of classification? Do you think that probably now things are going to look a little slower on the fraud classification end, or maybe this process sort of incentivizes bankers to start doing things more actively?
So I think the emphasis on identifying frauds in time has always been there in Reserve Bank instructions, number one. Number two, earlier there was a disincentive for classifying an account as a fraud because people thought they had to make huge provisions. Okay, RBI has brought some clarity on that issue even earlier. So I think one part is that classification of an account as a fraud in time has been there since the time the regulation with regard to frauds have been put in place, number one. Number two, I think what this circular adds is the data analytics and market intelligence as an additional source of identifying potential fraudulent cases before the kind of horse is bolted to the stable. So I think that is what is being expected here. So my view is that it will only make it faster. All that has been added is an additional. So it was also there, as I said, the requirement of going through the process of principles of natural justice. So that's been added as an important element as part of the master directions. So RBI has, once the Supreme Court judgment came, RBI has not plans to comply with that, because obviously the Supreme Court decisions are final, right, until it is reviewed otherwise. So that's already in place. It's only that timelines have been put in place, the process have been put in place, the governance system for going through that has been put in place, and that's what I believe the circular is.
All right, Mr. Vishwanathan, thank you so much for taking time out and talking to us about these guidelines. That was N.S. Vishwanathan, former Deputy Governor of the Reserve Bank of India. Thank you so much for watching NDTV Profit. Stay tuned for more news and updates.